through than I thought when we originally set this up. So as we get closer to like 25, 30 minutes, we'll kind of take a question break and pause. We do think there's quite a bit to go over, just in terms of statistics, data, and forward-looking stuff into new crop. So if you do have to leave, we get it. No hard feelings. Go ahead and sign out. We are going to record this and send it out later, so you can look at it and email us or call with questions later as well. Otherwise, there's so much to go through here. I'm just going to dive right in and not do any major formalities. So we're going to start with the whole focus of this is really to look into what's going on for next year's crop. Most of us are 80% plus sold on old crop. If you do have old crop left, the one thing we kind of tossed around here, and I think Jake's probably communicated the same thing, is at this point, prices are high. Basis is really strong, especially for those of us on the river where you have export pull, no ice situation, and on the Ohio River is pulling a lot of grain that way at a good number. St. Louis Harbor is bidding up for spot deliveries, or at least they were going home last night. So it's just a good opportunity if you need to move stuff for logistics, if it's a good time to truck so you don't have to do it later this summer, or you just like the price and are worried about missing out if it does change. We do see more in China in the news overnight. I think that's kind of what's really supporting the bean market a little bit. Is one of the umpteen million officials over there made a statement that they want to stay in good communication with the United States and continue moving forward on trade agreements. So beans are up 20, corn was up a nickel, 6 cents overnight. Nothing really to be taken away from that other than that political rhetoric is coming back, and that's always scary if you're along, just because we know how China is. As soon as they want to get prices down where they can buy something, all they got to do is send a tweet or make a statement and things go the other direction. So we can talk that through individually, but that's kind of where we're at. Otherwise, officially, we're going to stay long just because we think there's some explosive potential with Brazil crops that we'll get into, as well as spring and summer weather coming forward. Excuse me. So everybody see my screen? Is it up?
Yep.
Okay. So we went through this on some of the write-ups last Friday, but the USDA came out quite surprising, honestly. I think the comment I made to Jake was, I have to commend the USDA for bringing a lot of logic to the table. And they seem to have been doing that quite a bit the last 6-7 months. So in my opinion, they're handling the statistics of the current situation very well. They came in with a 92 million acre corn number, 90 million bean number. The combined is a record high. You add corn, beans, and wheat, it's also a record high. And to get more acres is probably the next task of the market, because as you can see on these balance sheets, we're starting next year from an outlook standpoint at the same ending stocks we have this year. They did keep the farm price about the same. Stocks to use at 10%, but they're using a record yield to get there. So we have a ton of risk premium we need to consider going into new crop. Then you go into the beans, kind of a similar situation. Once again, looking for a record large crop, extremely high crush, which is, if the pace we're on now continues, bean crush it's not hard to hit those numbers. They reduced exports a little bit. My guess is they're anticipating higher South American acreage, just high prices do what high prices do to bring in more production. One of the things I think that's really important to talk about here, and we've mentioned a few times, is old crop exports at $22.50. We've shipped 95% of the committed exports to date already. And I think this, correct me if I'm wrong, Jake, the statistic is if we continue on a normal 5-year average sales pace from now to the end of the year and leave all other variables constant, our old crop stocks are going to be a negative 200 million or thereabouts.
That's correct.
So we have to do a lot in terms of price to reduce exports. Currently, the U.S. is $35, $40 a ton behind South America beans on a FOB basis. roughly $1 a bushel. That is not unnormal this time of year as the Brazil crop comes off. The farmer there has extremely high prices in their own currency terms. So they're just plowing things into the market. Their harvest pace is behind. Their loading pace is behind. They will make up to the ground. It's just a question if there is a few cargoes that have to move here early out of the US to make up the difference. In the end, Brazil will ship all the beans that they're supposed to ship. It's just a matter of what part of the window do they ship them in? Do they ship them in the Feb through July window, or do they end up being more March, August? So then on wheat, we'll touch base on that too. Wheat was kind of the quiet guy in the outlook meeting, but if you look at the end results, we've got the smallest ending stocks estimate in 8 years. You had a big growth in feed, which we have to get that to get the corn number to work out. Corn feed and residual number is higher at 5850, but when you take the crop size up 1 billion, the residual factor in that can be 10 to 15% sometimes. So they're not increasing actual feeding that much. This residual component of the feed and residual numbers, more of the reason why I think we see that bigger demand number there. You can't have a large crop and not increase residual just based on their statistical models they use. So on the wheat, you've got a setup where we're still looking for a 49.1 yield. Wheat has not wintered very well, especially in the West. I know Brad's on here. He can attest to that there's a lot of wheat in the West. We don't know if there will be any at all when it comes off. So thinking of that, and then let's take a bigger, higher look at things. And you see Russia, Ukraine, their wheat did not winter well. The only bright spot really is in the EU, where they've had good moisture and a decent winter. So the EU is going to have a decent wheat crop. They're very versatile in feeding wheat versus corn. So depending on price relationships, we anticipate them to feed more wheat. So we should see world wheat feeding steady, if not higher. It really needs to move higher because of the world corn situation. But if we wake up and find out that the Russian wheat crop did not winter well at all, and we have some problems in our Western wheat belt, hard wheat versus soft wheat could really make a move, as well as just hard wheat in general, or wheat complex in general, should continue to move higher. If it does that, the risk to the corn balance sheet is it may be harder to coax it into the feed ration. So that's one of the things we're looking at there. So let's dive into the row crops a little bit. Old crop ending stocks, this is all known, but it's nice to see it in a historical, kind of see where we are versus going back all the way to 2013, the year we came out of the drought. We're at a 1.5 billion carryout. I would anticipate that this number stays somewhat steady just because of what we need to do in terms of shipments. Export shipments are going to be really important in determining this ending stocks number. If we see another run from China where they start buying corn heavily like we saw a few weeks ago, people will start talking this number down. The other thing that's really concerning right now is the South American production. You're going into your third week of dry weather in Argentina as their crop is in filling stage, and then your safrinha corn, which is the second crop corn in North Brazil, well, all the way through Paraná, but that corn is going in very late. We'll get into some statistics on that here in a bit. But that safrinha corn, let's say 82 million tons of corn, 60% or more of that is going in after the ideal planting window. So consider 60% of the Iowa, Illinois, Indiana, Ohio crop going in after June 1. Kind of a similar setup in that regard. So if the dry season sets up normal, those Brazilian acres have quite a bit of risk. And one of the really good crop analysts that we work with, he's of the opinion that there's up to 20 million tons of that 80 million tons at risk in a production problem just from the dry season setting in on time and this corn being planted late, pollinating during a dry season. Regardless, we think they will plant all their acres. One thing to consider in Brazil is if they don't plant those acres, they can't just leave it fallow. The weed pressure and things that take over is so much more expensive to maintain than if they can get the corn in the ground, feed it less fertilizer, and just kind of keep it there as a weed control program. So think of corn almost like a cover crop for them just because it has some income potential, but they can't afford not to plant some. So we will see the acres go in the ground. It's really a question of what that yield is going to be as we get into July.
I think the quality is going to be an issue too, Nate.
I can barely hear you.
I said, I think the quality is going to be an issue for Argentina or Brazil sucking crop corn as well.
For sure. Yeah. The setup, I mean, just like in the US, if you've got that late planting, you're going to have less heating degree days come the end, and you're going to have lower test weight issues, all the things that come with a late planted crop, they're going to experience. And for all intents and purposes, this is the crop that they export. So if that's a major risk that the market needs to start pricing in an old crop, if we start to see that problem develop, you will see the July-December corn spread and just July futures in general make a pretty strong move. We'll be watching that on a weekly, daily basis. So you got the old crop stocks, then we come in, and thanks to Susan for some very good graphics here, you can see our starting point for new crop. Now look at the big range we traded old crop, that big dark line up top. We moved upwards of 1.5 billion, more than that, from top to bottom in terms of ending stocks projections. So anything can happen year to year. But with a normal, or with a current Chinese export program and our current acres and a record yield, we're still starting at one of the lowest levels we've seen in 7 or 8 years here. So that lends the market to have to build risk premium into new crop. To put it in a different picture, I like to think of ending stocks in terms of days of supply, because if you say 1.5 billion, that means a lot different now with our current, just get accurate statistics, when we're using 15 billion versus even just 3 years ago, we were only using 14.2 billion. So we're using 1 billion bushels more. So 1.5 billion is a different percent as it was years before. So in terms of days of usage, we're right in that 37-day range right now, that 2021 crop, and then the outlook number for 21-22. When you start to go below 30 days, that's this little 2011 through 2014 window, that's when you get some major price spikes. Now, a few things are different here. China is a huge portion of this. If prices get too high, they could back away, especially if this corn they're buying is for a stock building purpose. It's not all an inelastic demand that has to be used right now. However, if you look at the setup where you've got record acres, record yields, and we're still coming out with a lower stock number, and let's say they're only building 20 million tons of stocks where they used to try to carry 200 million, their stocking program should be multi-year. So any weather issue, once again, should play out. You start to trend these days of ending days of ending stocks down into the 30 and below level. It's non-linear in terms of how price is going to react. You've got prices around 4.5, 5, 5.5. You go sub 30, that's when you're talking $7, $8 corn. Those are the types of things that I think we got to keep powder dry for when you think of asymmetrical risk. We could have a great yield and ending stocks go from 37 days to 42 days. Okay, prices are going to go to like $4 from 4.5. But if we lose 3 bushels an acre and we go, what is that, 250,000 bushels, all of a sudden you're in the lowest ending stocks in terms of days that we've had. So why wouldn't we think of this type of potential? So our asymmetrical risk profile is there. That's why we want to keep some powder dry going into new crop. You look at kind of how things developed here. This shows corn prices in China, and this is part of the big reason why China is buying U.S. corn. This purple line is where corn is landing in port China. These other 3 prices are different demand points within China: Changchun, Dalian, and Chakou. All these different points, north to south, are all being able to buy U.S. corn at quite a import margin. So the economic incentive is there. Our prices going up or down 20 cents means nothing when they're able to secure nearly $3 a bushel importing a bushel of corn. So question is, and this is off the U.S. Grains Council presentation last Friday, is this current bid for corn temporary or is it a long-term play? This margin has been here for many, many years, but up until this year, they haven't engaged. Part of that we think is the trade war. The other part of that is that this Chinese stocks program that if you go back for the last 10 years, every export conference or different places I've traveled to around the world, everybody has a different ending stocks number in China. One guy says it's 300 million, the other guy says it's 100 million. The market kind of centered around 200 million tons. So roughly 100% of 1 year's production. They're around a 220 million ton producer. If that's a farce and their stocks are truly below that, and if they are there, we're talking 5, 6, and 7-year-old corn stored in wooden silos and very poor storage. We all know what bugs and rats do to corn over a long period of time. Their feed value of the corn in store is not good. So personal opinion is this is a longer term stock build program. It may ebb and flow with import margin pricing, but overall we think they will be an improving corn demand player for some time. Switching over to beans, the ending stocks on beans starting out super low. We're at 120 million. This is a rationing level. As you heard us say earlier, if we export at a normal pace, we're at a negative number. Basically, the USDA report is saying we need to find a price that ends us at this number, not these prices today say that this is our number. Then you start this year, you started at about, I don't know, less than half of the ending stocks that we started last year's assumptions with. So you've got a record yield built into that number already. Same story as on corn. There's a lot of risk premium we need to consider for new crop pricing. So same concept here on soybeans with days of supply. These supplies, so we had a price spike at a 9.6. 10 is our previous low in terms of days of supply. As long as we feel like there's a supply coming online, this market will stay somewhat subdued. The difference between 2021 now and going back to this 10, 11, 12, 13 years is the massive increase in South American production. You now get a 130 million ton crop out of Brazil 6 months after the US crop. So your bridges have to be much shorter to get from supply chain to supply chain. The real question is, how much growth will we see in soybean import demand into China? We had a big jump because they came off the ASF, they're rebuilding herds. They're not really stocking beans, they're using them. Double stock some, but ultimately their import demand is going up 2-3% a year. So if we have a yield problem and start to peel below this, and I would tend to say that 9.6 is really a zero. Both these price projections are very explosive in the event of any sort of weather planting production issue. The demand is kind of set on beans. It's not quite as unknown as it is on corn, unless they have a flare up of ASF or politics. But if we think in terms of normal activity, the Chinese are here to stay. They've been here to stay for a very long time. Any weather issue, soybeans are extremely explosive. So you look at what China has done in general, they're the big elephant in the room here. You've got soybeans as their main import product. This dip is ASF and the trade war. They kind of both coincided. This is the start of coming out of ASF and the trade war starting to end. This year, I mean, their imports aren't that much increased, but they're still a record large over historical. If we didn't have this dip from the ASF, this kind of steady trend line would have continued, is our opinion. Their economy is still in a moderate growth rate phase. So they're still growing at 2-3% a year. That 2 or 3% is almost directly correlated to their demand increase for imported foodstuff. So, but what they added here is corn. You got wheat that they're adding. Both were commodities that they kind of had as their, we want to be self-sufficient in corn and wheat. Well, it's not happening because diet changes and the growth in the population. So they're having to import some of these, whether it's for stocks or immediate demand, we don't know. Barley is another one of those. And then, of course, sorghum. Sorghum is mostly for the fire liquor, but they had 3 very lean years of not being able to make the baichu or rice wine or whatever you want to call it. And now they're making up for it. That is a staple to their culture, and they'll continue to be here for sorghum. For those of you out west, that's something to consider if you do have a wheat issue. The bid for export sorghum should be there. The basis should be extremely strong. Trades versus corn. So that may be an alternative crop for you. So this is kind of looking at oil seeds in terms of who's buying it and how much. I mean, obviously China's the big buyer. When we went through the trade war, Brazil picked up a bigger chunk of that Chinese business. The U.S. had to pick up all these rainbow colors of rest of world business, but ultimately the growth, as you can see, continues. We have a continued growth for row crops worldwide. Same on corn. If China continues to grow, how big do these subsequent bars look going forward? I know for a fact, after spending 15 years trading grain over into Asia, the Koreans and the Japanese have been very, very worried about the day China starts to show up for corn. They live on just-in-time inventory. They use the vessels in transit as their storage. Storage in country in those 2 places are extremely expensive. It's hard to build new. The way you think about it is you take California, you stick 180 million people in it, you move them all to the coast and the edges because the middle's full of mountains, and then you try to build a grain elevator. Well, when you can build a high rise and put so many houses in it, the grain elevator is too expensive of space. So they use water storage or vessel storage. If China starts to suck down the world supply, these guys have a real food crisis on their hands. It's not surprising to me to see some of the things going on where you have like CGB, a Japanese-owned company, increasing their elevator holdings in the United States. They know that's a place that they can store grain and demand because they own the entire value chain from truck delivery to the port in Japan. That's how they secure a supply. But if China comes in, these other buyers should step up their activity, and I wouldn't be surprised to see them start to do a little larger of a internal stocking program, just as a hedge against food inflation going forward. So why is China buying so much? This is very telling. This is a very busy chart. We'll have it in the presentation later, but it's kind of by month, going back to 2010, what their sow and hog herd has done. After the ASF, I mean, ASF was kind of creeping in here, but it became a real disaster in 1920. This rebuild, this huge ramp up is changing that from, you figure, what is it? China has 700 million farmers compared to the US population of 380 million total people. So they have double the number of farmers as we have entire population. Most of them farm 1 to 2 acres. They have 1 to 2 hogs. They raise them on their front porch of their house, some of them in their house, or they have a little outbuilding. That is the Chinese hogger. Well, now after ASF, because a lot of those backyard hogs were the major contributing factor to the spread of it, they're moving more and more production into a factory type setting. So they're going to be more efficient, but they're also going to be able to grow a lot more. So as they convert from backyard livestock farming, this increase in their herd, it comes with different risks, but we anticipate that being a more steady demand play. They have all negative pressure buildings and all the modern technology for disease control in these new facilities. So there's a big story developing here. It's not that the market hasn't priced it, but it's kind of interesting to talk about it just after having spent a lot of time over there and seen how primitive it used to be. And I've seen some of these facilities that were in development 5-10 years ago. They're now much more advanced today. So they're here to stay. The pork is such a big part of their diet. They would have a major demographic problem or a geopolitical problem in terms of those people start going hungry, the government's not going to stay in power. So the government knows first and foremost, they have to keep the people fed. You look at, we kind of brushed over some of this, corn exports, slight increase next year, new records. The USDA is playing from the hand that China will be here to stay in corn exports. That's the best information we're going to get. So we need to play from that position as well. Okay, so on corn, China is what, 700 million of 800 million increase in 2020 and 21. So if they step away, this whole discussion, we'll have to ignore it ever happened because prices are going to get cut in half and the market's way oversupplied. If they're here to stay, our supplies are tight. They drive everything. Currently, they've shipped about 253 million bushels of what they've purchased. We anticipate them purchasing more. The outstanding sales is going to be something people are talking about just because the shipment pace has to increase or has to stay steady. This dotted line is the weekly pace that we have to ship corn to hit the USDA estimate. We have the port capacity. We are on pace today. There's a little dip in no Ds, that's fine. I anticipate as we come out of this ice situation that the Gulf and the PNW and all ports will be operating very, very rapidly, and this pace will continue. The next question will be, where's the next sale? The market's already traded the sales on the books. The only thing that really comes out of this is if we're not hitting inspection pace, then the market will start to back off and say there will be cancellations or rolls to new crop. Soybean exports, kind of same thing. We talked about this a little bit. You've got a nearly a billion bushel, 800 million bushel increase year on year as we come off ASF. They're restocking. You saw the hog herd rebuild. The story tells itself. What's really interesting though in beans is, let me find it right here, export inspections. So the reason why corn inspections were low, if you go back to the last chart, is because beans were taking all the spots on the lineup. We have the ability to ship what we need to ship out of the United States. It's literally a matter of who gets to be the front in line. And in October through February, or usually October through January, it's always going to be soybeans first. They make more cents per bushel on export margin. They're single commodity boats. They're all going in one place. They flow through the elevator faster. All sorts of things lend them to take the front of the line. Now the soybean seasonality moves to Brazil. Corn should take up the slack, but you see how much we've shipped of beans versus historical. We've shipped 95% of all the sales that we have to name China, not counting unknown. There's a limited amount of unknown right now. And I'll tell you, those unknowns could be Japan, Korea, Indonesia, all these other places. When we were an exporter, we reported all sales as unknown. So just because it's unknown doesn't imply that it's a Chinese sale. It's something to keep in mind. I think some of the people miss that when they don't have the experience of doing it. But the soybeans are shipping on pace, just like the statistic we rattled off earlier. If we sell at a normal pace and ship at a normal pace going forward, we're still going to have a very tight stock situation in soybeans. So we should look for further reductions in stocks, or we need to get prices up to reduce demand. So kind of tying things up, I'm doing better on time than I thought. We're at the 30-minute mark. I'm going to finish this quick thing on Brazil, and then we'll take a break for questions. I know I've gone fast, but I was trying to respect everybody's time. I have a hard time paying attention after 30 minutes myself. So one of the last main things I want to talk about is the pace of harvest in soybeans in Brazil is going to affect the pace of planting of the safrinha crop in Brazil. Currently, to date, beans are 34% harvested. 5-year average is around 58%. Last year, they were at 73%. So you hear a lot about the lineups in Brazil being long. Part of it is they're just not getting harvested. The beans are out there. the roads are dirt roads. They got a long transit. The bottom line is they just can't get the beans in port because they can't get the combines in the field. So you heard me say earlier, regardless of when they start shipping, they will get them all shipped. They've got the port capacity, they got the beans. But these long lineups start to cost money. If you bought a CNF cargo, after so many days, you, as the seller of that cargo, you start paying what they call extensions or penalties. That's 1.5% per day of the landed China value of that grain. So you're paying 1.5% of the freight, the FOB, and the insurance of getting it to China. So some of these exporters, you may start seeing some jangling around in the lineups because they got boats parked in Brazil. They'll try to spread, like buy in their current FOB, sell back their current FOB, buy a later FOB, leave their boat there, and then go buy an emergency cargo off the PNW. We heard yesterday a few of those may have traded, and maybe what's supporting beans here overnight. In the end, whatever we sell earlier now is something we won't sell later in the marketing year. I don't think it changes our export forecast just yet. But the real takeaway is because we're so late on harvesting beans, we're very late on planting corn. And like I talked about earlier, that late planted corn puts their pollination window in the dry season or into a freezing situation in the south. So both are massive increases in the risk of maintaining the yields they need to get to an 80+ million ton crop. So if we get another couple of weeks here and the pace of planting or the pace of harvest continue to lag, I think the market's going to respond very quickly. Any question? Let me take a break there. I know I've been going for 30 minutes here. Anything we want to come back and talk through or discuss?
Hey, Nate, and one thing, I think we can probably just send this presentation out later as well. So if anyone wants to take a look at the slides again.
Yeah, we'll record it and send it out. But while it's live here, if something was on your mind. Okay. I only got a few more, so bear with me here. The planted acres number, that's going to be the biggest discussion over the next 30-45 days. Yeah.
I guess it is.
Hello. Okay. That planted acres number, I really don't know what to do with that. There's going to be surveys go out. There'll be independent numbers come out. We'll get a better idea. I don't anticipate huge changes in the I states or the major corn growing states in general. Your changes are going to have to come from the south or the north. If you go look at the cotton market right now, it's not doing anything to give up acres for soybeans. Spring wheat, maybe we lose a little spring wheat and pick up some corn. But if it starts to lose too much, there's a certain inelastic demand on spring wheat where it'll pick up and buy back those acres quickly. So I assume a lot of the USDA's math involved going through those calculations and saying, well, I can't really take acres from this part of the cotton country because to convert cotton acres to bean acres is an expensive proposition just because of the fertilizer planning. And cotton prices are screaming. If anything, they're as hot or hotter than the bean market has been. So this planted acre number is going to be a very dynamic discussion. It's going to create a lot of volatility. But I think it's important if you start feeling like I need to make a switch from corn to beans for economic reasons or something like that, it's helpful to us as the group to know, just because that change is going to be magnified. If you're making those decisions as a business guy, other people are as well. And we want to know about it and we can hopefully adapt strategy to that. So Jake, you got anything more on that?
I did have one question from somebody talked to me yesterday. He says, what is the situation going on with Mexico on about the talk of eliminating GMO corn between now and the year 2025? Can you address that?
I know very little, but what little I do know is there's a lot of caveats to that. It's like a certain food corn going into certain ingredients. So I don't think it's necessarily pointed at the feed corn market as much as it is. Mexico grows a lot of their own like tortilla chip corn and milling corn. And I think that some of that imported milling corn is what they're pointing that at. I'd have to go back. I saw something on that quite a while ago where they were talking about it's not really as advertised as what Bloomberg or some of these media guys want it to sound like. So I don't think it's going to massively affect their imports. They have no choice but to import a certain amount of U.S. corn. And if they want to go all non-GMO at a time where prices are already $5.50, it makes no sense. So maybe I think they're doing it on a kind of a show basis for certain food ingredient corn. But we need to research it more to make sure, I guess. Anything else? There is, I'm sorry, I hit the button wrong. We'll put a link in there. There is a really neat link Susan found from the USDA that kind of shows where the droughts are and the percent of acres affected by drought. The US is in pretty good shape going into this planting season. And I'm sure as this updates with the snow melt and everything that's happening this week, at least central Iowa all the way to the east is in darn good shape. The real question is what's going to happen in wheat country. You got some problems in Nebraska, which we all know is highly irrigated. But you also have some developing problems in the Dakotas, which are major swing acres and major drivers in national yield in terms of if they start to have problems. They're more susceptible to problems, and if they do have some problems develop, it can affect national yield pretty quickly. You got wheat problems in western Kansas, eastern Colorado, just from super dry weather. The setup is good for planting. It may become a question here, depending on how the moisture content comes through, of are we going to be late again or not. Long-term forecasts, you can take them for what they're worth, but we're going to have above average in Iowa, Illinois, Indiana, below average out west, and then kind of an average to slightly warmer bias going into the next 3 months. So I don't like to trade that kind of stuff. It's hard to get a 2-week forecast right, so no less a 3-month. But we do have let me make sure I say it right. We do have the La Nina setup still, which often can be problematic for U.S. growing. So we are keeping an eye on it. Any other questions? That's kind of the end of all the slides I have, but we can dive into other things as well.
If you had to use one word to sum up the entire presentation to our clients, what would that one word be relative to forward marketing?
Patience.
Thank you.
What did you expect me to say?
I would have been disappointed if you said anything else.
I think we have a very dynamic market with an asymmetrical risk profile that there's a couple years here that we can really do well, and we hopefully can walk through this without too many hiccups. The real key is going to be having dry powder and not getting caught up in the day-to-day news stories. So, all right.
Since you're patient on this year's crop, I would assume someone out there in the group is thinking about, okay, well, what about, we're talking about 21 right now. What about 22?
Well, that's a great question. The way I look at that is you're going to have a natural inverse develop in these situations. So the 22 crop is going to really struggle to keep up with what we're doing in 20 and 21. So that's another one you're just going to have to be patient on. When you get into an inverse situation like this, the front's going to have to lead us higher. That's where you're getting outside money that's not normally involved in the market, coming in as a buyer, pushing things higher. And then it's not till we kind of really get to that end of that, probably at the end of the 2 or 3 year window, where we start looking forward and saying, okay, can technology catch up? Can Brazil add another 5% acres every year? What's Ukraine doing there? Is the Chinese going to add a GMO traits to their domestic production and pick up 10 bushel an acre on yield, things like that. When we start to feel like that, that's when we can reach out 2 and 3 years out. Otherwise, in these inverse type situations, it's better to stay closer to home, in my opinion.
All right, any other questions out there?
Okay, we will feel free to email or call. I know a lot of people don't want to bring up stuff in a big group like this. I do appreciate your attendance. We'll send out the recording. We can also just send out the presentation as is if you like that. But thanks for coming on and have a great day.
Okay,
Thanks, Dave.
thank you.